Good evening, everyone. My name is Paul Young. I'm just going to walk you through the retail sales for Canada for January 2016. So, as I say with all my presentation, this is one perspective of retail sales. I'll talk a little bit about the trends and the implications of what's going to happen as we move forward with the economy in 2016 and retail sales being part of that. Here's a little bio of me. I have my own YouTube channel. You're more than apt to go out there and look at some of my other videos that I talk about, from financial solutions to economic trends or even government policy, to kind of give you a different perspective or view of what's going on. So let's talk about my agenda. My agenda, will talk about the Canadian dollar because that drives in the price of imported goods. So the dollar is weakened, that's going to force the cost up of goods. I'll talk about housing starts because that's an indicator of how strong the economy is as part of leading indicators. So I want to kind of discuss that. I'll show retail sales by province to show you where the trends are. I'll talk about retail sales by market segment, and I'll talk about trends around store closures and what's impacting the market. So in summary, retail sales are up year over year about 2%. Now, they're driven by a couple of key areas, and this is critical to understand. Automotive sales are still doing quite well. They're big ticket items, so they're driving about 1/4 of all the retail sales, so their percentage is helping to increase that. Building supply stores is another good indicator. We're seeing that 3% up. That means more people might be doing itself work, more renovation work, which benefits the construction industry, so we're seeing people possibly building home improvement area. The interesting trend overall, when you look in the downside, is food stores are flat. So that could be a couple things. We're probably seeing a lot of pressure from the Loblaws of the world, the Sobeys, in terms of price cutting. So you might see where those things pressures are forcing the revenue down in terms of the pricing. So that's probably part of the reason. It's very competitive. That's the other reason that's driving that as well. The dollar just shows you where we are. We're at a period of time with low commodity prices, and since the Canadian dollar is based on commodity prices, it's going to be driven by that perspective. So what you're seeing here is we're not seeing any sort of uptick or increase in value of the dollar till into 2017. So we're going to see a period of 2016 with a high Canadian dollar, which is going to push up the cost of goods retail pricing. I showed housing starts here because it shows you a good indicator here, and we're seeing that it's rising. We had a strong February, which should give us an indicator that possibly February retail sales probably will still be relatively strong again, and that's a good area to focus on as we move forward. Now look at the provinces here. Now it's understood when you start looking out west where you're seeing maybe some downturns, so that's why you look at Alberta. Their retail sales are down year over year, which makes sense. They're in a deep of a recession there with the low oil prices. But look at what you're seeing in Ontario's case, in Quebec. We're seeing a pickup, an uptick of the economy here driven by exports, which means people are probably have more disposable income to spend on things, and you're seeing that trend in case of Ontario and Quebec. But the thing that you need to bear in mind here in Ontario's case, Ontario's drafting key policies here, from carbon tax to Ontario pension plan, that's going to impact the cost of goods as well as disposable income, and that will impact retail sales, and that's something that's not discussed a lot in the media or discussed in general by people. This shows you the trends. So as you can see, automotive is the big one where we are up to 11 billion in the month, and that's like a 4.8% change. But look at how the change is done year over year from the same period last year. We're almost up 15% from the same period last year. So where January was a slow part, and we've seen that last year, that January we had the first part of the year was in the recession, and that would make sense. Retail sales were down in that period, but they were still growing, but they weren't growing that quickly, and that's a good indicator that you're seeing here. I can't go without talking about retail store closures. More and more you're going to see this, is because it's very competitive when you get into different types of things, whether it's electronics, whether it's merchandising, fashion merchandising. You're seeing pressures on it because they got to move volume. They have their retail rental costs they have to absorb, and they're finding it struggle to compete and hold markets. And that's what you're seeing here with the closures of Denier Leather, Laura, SmartSet, and Jacob have all closed early on this year, and we saw closures last year with Target. So a lot of cases business fail by a few reasons. One reason is they don't understand the market, and they're not adaptable to respond to market changes. Okay, And because of that, the competitive pressures that we're seeing globally with more international companies coming into Canada, there's more pressures on local ones to be able to compete, because it's all about buying. It's all about leveraging your cost structure, and some of these retail stores do not have that ability to do that. So that's why I put this slide here, to understand a bit of the trends. Now, this presentation was to give you a quick overview of retail sales. It also allows you to kind of take a look at things, what's going on in the economy. Thank you.